Hi guys, hello to those of you who choose to watch my summary of Groupon. As I already mentioned, today I will be discussing the company Groupon. After a previously failed business venture by founder and CEO Andrew Mason, Groupon made its debut in November of 2008 by offering 2 pizzas for the price of 1. After this, the company grew rapidly and was named by the Forbes magazine as one of the fastest growing companies ever. That's amazing. Then in 2011, the company went public, raising the second largest amount to date at $700 million, second to Google or Apple. I can't quite remember when they went public. But in less than 10 months, the company's stock prices fell a drastic 84%, taking the $26.11 share down to a meager $4.15. So what happened? Well, despite the rapid growth and an immense increase in their international segmentation, which made up for like 61% of the company's revenue, it simultaneously contributed to their loss. This was due to their upfront marketing, sales, and infrastructure strategy in the international sector. Overall, to me, the company's major issue comes down to their mismanagement of their finances. This case study makes the following remarks. The underlying concern regarding Groupon's financials was that the company realized a total net loss in income every year since its inception. Because of this, Groupon quickly drew attention from investors and from the Securities and Exchange Commission. Financials aside, the management of the company was poor, and which then is what contributed to the diminishing financial reports. Eventually, they had to restate their earnings due to their lack of accurate and conventional ways of stating their numerical figures. They kind of prided themselves on being different in the way they did things, but I think they did it to an extreme which was not healthy for their company. And then this also resulted in several class action lawsuits against the company and the company's directors. At the time of publication of the book and the case study and everything, so in 2012, Groupon was moving in a positive direction. They still, however, had not recorded a profit. Some of their strategies to note in the company are: 1, they wanted to grow in subscriber and customer base. This means they making significant investments in online marketing initiatives. They wanted to display advertisements, and they wanted referral programs. Second, they wanted to seek to grow, the number of their merchant partners. To do this, they focused on providing a positive experience for the merchant by offering targeted market placement of their deals to the subscribers. So they really just worked at helping put the right coupons, the right advertisements out for those merchants. Third, they wanted to position themselves so that if there was a technological change, such as the development of smartphones and tablets, that would just affect the customer, would be positively as a company benefited. As we know, technology has changed so much since the time this was written. So that was one of their strategies. Fourth, they're implementing ways to cause an increase through innovation to vary their products. They simply plan to just continuously push new ideas and ways of connections to merchants out to their customer base. Fifth and finally, they want to expand through acquisitions and business partnerships. They want to focus on gaining businesses that are more technologically geared. As already previously mentioned, they want to be on the plus side of technological changes, and in 2020 now we are so technologically advanced, and so they want to just focus on making sure that they are being more technologically geared, which they're already like an online company anyway, so that helps. This is in hopes that it will help expand the company more. So those are some of their strategies. And then a question I have for you all. We see the company has had a bumpy go at things. It started off strong, but just as quickly as it grew, it simultaneously began to tank at the same rate with which it grew. The text also mentioned that the launch of the company was during the Great Recession. So do you all think that the explosive growth can solely be attributed to the quote-unquote luck that it was launched during the economic crisis that was the recession? I said, for example, if it had launched now pre-COVID, if it launched now, that it would have had the same initial success. So can't wait to hear what you guys have to say. Thanks.